Investors can look back on quite a successful year so far. How things will continue from here, I will now discuss with Chief Investment Officer of VP Bank, Felix Brill. Felix, is the Delta variant of the coronavirus an economic showstopper?
No, I don't think so. It might slow down the recovery, but it's not going to stop it.
But travel restrictions are back in place and vaccination rates are stagnating. What does that mean for the coming winter?
It means that it's going to stay with us, of course, and this is annoying. This is annoying for companies, this is annoying for us as individuals, as consumers. But I think we can say that as of today, the uncertainty is lower than, let's say, 6 or 12 months ago. And this is actually good news for the economy and the economic recovery.
With Corona aside, we need to talk about China, where the central government has cracked down on certain technology firms. What is going on?
The reason behind that was that those companies became a bit too powerful. So they have gained a monopolistic position in the market, a lot of power, and this is something the government didn't like. So they addressed that, implemented regulatory measures, and this was something the investors and the companies didn't like. So stock prices went down quite a bit. And on top of it, the government also used that opportunity to address some other issues in the economy, namely in the education and the real estate sector, because the overarching theme right now is the question of income distribution, and this is something the government takes very seriously.
That's why the Chinese stock market has been so weak. But now the Investments Committee has decided to go back into Chinese shares in a targeted and measured way. Why?
I think it's a good point now to start at least to add some exposure, but as you said, selectively. So we didn't want to go blindly in the whole market. For that, the uncertainty is still too pronounced. It's too high. We rather would like to focus on companies that are in a good position to benefit basically from the overarching theme of the common prosperity that's now so high on the political agenda. We think a lot of companies in the consumer sector are in a good position, and therefore we focus on these companies.
What about the equity allocation in the portfolio? Would it be now a good time to reduce it because the markets have done so well and the economic growth rates are falling?
Well, of course, we discussed that question as always, but we came to the conclusion that it's not the time yet. And we think equity markets still offer upside potential. They're well positioned. They are more attractive than, for instance, government bonds, and therefore we decided to stay strongly underweight in government bonds and at the same time fully invested, meaning at the level of the strategic allocation in equity markets.
Thank you, Felix. And that concludes our view of the questions. I hope you can draw some conclusions for your own portfolio. If you like, we'll be back in October. Bye-bye.